Now you see a lot of loan sourcing is happening through digital modes. Loan on WhatsApp, right? You can, on a call, you can take a loan in 2 minutes. Now, if you're sourcing the customers digitally, why cannot you push them or nudge them or at least remind them versus following up on calls every time? I think so. There we saw that what is the borrower behavior on a lot of these digital communication channels and platforms, and how you can enhance. I think bots on WhatsApp, on voice, a lot of innovation is happening on bots on voice, where it is exactly mimicking the human telecaller, but it takes some time for even the borrower to identify that it's actually a robot speaking and not a caller.
Hey everyone, this is Prashant and I'll be your host for the VC10x podcast. And today we have Rishabh Goel with us. Rishabh is the co founder and CEO of Credgenics, a tech enabled debt resolution platform working with 100 plus banking and NBFC clients like HDFC, ICICI, Mahindra Finance, and more, with an overall loan book touching $60 billion. In this episode, we talk about Rishabh's journey from IIT to starting Credgenics. Why did he choose to solve the problem of debt collection? How did they think about go to market in the early days of the business? What were the key indicators of product market fit for them? How to scale the culture as the company grows, and so much more. So, without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast10x, where I help VCs start and run their own podcast. While I was running VC10x, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Rishabh, so good to have you on the VC10X podcast. How are you doing?
Doing well, great. Nice to have you, Prashant. Looking forward.
Yeah, totally. Pleasure having you on the podcast. To start things off, can we first have your story all the way from IIT to doing a startup called Credgenics?
Yeah, I think it's obviously an interesting journey, and I think it's an interesting journey for almost everyone who aspires to start in college. So I think I graduated in 2016. So post that, like, I think a lot of things gets decided. Uh, uh, like I believe a lot in destiny, Aston, that you get to choose a field which is designed for you. So I think a lot of things obviously you can plan, but some things comes your way, and just I think I believe in going with the flow and figuring out things. Obviously, I think post that. So my first job, ended up in a finance sector, which was with Deutsche Bank, and I think then post that, like, worked with BlackRock. So I obviously spent some time, at least 3 years in the financial markets and the job sector. There are multiple learning curves, right? See, IIT as a college also instills in you a lot of entrepreneurial spirit. I think that the containers, even if you see a lot of professors, etc., they keep on professing this message that you have to be job giver, not a job seeker. So I think that don't worry about the placement season. You should not be worrying. You should be the last person to be worrying about placement season. I think we have to improve the overall employment in the country. So I think someone has to take that initiative, and hence I think entrepreneurship in general, now I think with the advent of Shark Tank, etc., and it has reached masses. at least that concept has now reached masses. Otherwise, this was a very novel concept which was very limited to stakeholders who are from some top-notch colleges, where I think business, or maybe some MBA colleges. But right now, if you see a lot of these startup founders, etc., are not even MBAs, right? Even I have not done my MBA. So a lot of people, and if you see, even if you study about majorly even the unicorns, which are the unicorns in India, I think 80% people are not MBAs. So how can then someone learn business and like coming from a technology background or maybe some other background, but not a business background, I mean to say. Even my family, like there is no one from business. Everyone is in either government jobs or maybe some bureaucracy or maybe some private sector, but I think no one is actually into core business. So obviously the exposure is there, and the I think the college also teaches you to pursue entrepreneurship. They promote it. Uh, Now I think the question is when to do it, when to start. Some of the students even have started even during colleges. But I think the big question is that, like, without any experience, it is very difficult for you to understand the nuances, because you have not worked in any professional setup, right? So how to set that shop up completely and run it professionally, so you should have some data points and some exposure to that, for which I feel some sort of exposure is necessary. I think, having said that, it's not that people who have not graduated or who have not taken professional exposure have not built great companies, but the percentage might be lesser. In terms of the percentage or the success rates might be lesser. We hear about one or two stories, but I think like there are hundreds of stories which are not heard, which were not successful. So as a percentage, I think I would still feel that at least some professional exposure is important to understand, like what you have to, how you have to scale that part, maybe what you exactly intend to do. So I think, yes, coming back to my journey, I think spent 3 years in this sector, and then but, like at that point in time, used to see and read a lot about a lot in economic times, etc., etc., because of the nature of job, developed interest for the markets. I think so. One major area where we could see it was always written, NPAs are rising, NPAs are rising, and I think that was a constant headline and the buzzword which was there in 2018, 2019. At that point in time, I think so. Obviously, that arouse some curiosity as to what exactly is the reason, right? And that is also one big reason as to why the credit penetration is not happening in India. As like people who actually genuinely require loans are not getting it, and any country's growth, whether it is GDP growth or any type of, if you measure growth in any form, right, shape and form, it is dependent on what is the penetration of credit. Now, US is one of the greatest economies in terms of GDP, etc., but it is like the credit is highly penetrated there, right? People use leverage, people use credit, and the money keeps on circulating. So the circulation of money is very important. I think in India it is like, just to give an example, right? Like in US, on a population base of 300 million, the number of credit cards is roughly to the tune of 1.2 billion. In India, on a population of 1.5 billion, uh, the credit cards are 6 million. So you can imagine that 60 million, sorry, 60 million, 6 crores. And the, like the population who has it is roughly, I think so there are 1.8 credit cards per holder, so maybe 3.5 crores is the population which carries a card. So this is a, like the difference in terms of the level of credit penetration, which obviously I think after studying a lot of these things, we understood that there can be some value proposition on this line where we can help how we can accelerate the speed of this credit penetration and financial inclusion, and what all things can be done. I think so. Like the brainstorming started from there, and any which ways, I think I was done with the corporate sector. So I thought that uh, let's try. And I think the risk appetite at that age was also a little high, because like the you have hardly anything to lose, right? Like you have worked enough for a lot of these brand names. Like you have tags. You have got a lot of tags now. If you want to do an actual work, I think you should do it. So I thought that I've got IT Delhi, I've got Deutsche Bank, I've got BlackRock, I've done my CFA, I've done so many things, right? But all these are tags. Uh, I don't think there is some actual work which is still done. Uh, I think that was the thought process. Like you have to what you want to be. I think if you want to be a very big part of a small ecosystem where you can see the change, or you will become a very small part of a big ecosystem where you'll not be able to see any impact. I think so. That is the thought process. Hence, we started in 2019.
Yeah, that's an incredible story right there, all the way from learning how the ecosystem works within the IITs, the premier institutes in India, and how they're trying to instill entrepreneurship in their students, right? And then you getting the work experience first, and then diving into the startup world, right? And something that I've also learned is that you also found your co-founders at IITs itself, right? So tell us about that story of how you all came together and thought, okay, let's do a startup together, right? And then thought that, okay, this is the idea that we want to attack there.
Right. Yeah, I think so. It was not definitely that during college only we had thought through this. I think so. We knew each other. We were friends in college, but I think while this idea, or like we were thinking about this idea seriously, it happened uh, in 2019. I think where a lot of these movements were happening, and I had some exposure to the financial services space by virtue of my job. So I think so a lot of brainstorming sector on ideas kept on happening. Now for me, right, it was very important to figure out someone who can handle the tech, because if you're planning to build a technology platform and a SaaS platform, it is very important to figure out who can handle tech at your end, right? So I think then I could sense, and I think fortunately met Anand, because since he was also in Delhi, I was also in Delhi. I think, and then we met, discussed, brainstormed, and started working on it. But I think that is something. It helps. Obviously, the alumni network helps you have good connects, etc. So that helps for sure. But it is also like they have to also believe in that idea, and then because it's an idea, right? It's just an idea. Like execution is the key. So I keep on saying ideas you will get ample, but someone who has a vision to actually implement them and execute will be the one who will make some mark. I think so. Now I think from an idea perspective, obviously it has to sound logical and exciting, but the key is execution. I think so. We also, there is a comfort level, right? Because we already knew each other, and so that issue of finding a tech co-founder, which a lot of these startups face on a day-to-day basis, I think gets solved if you find someone whom you know, whom you trust. So I think that becomes an easier part.
Absolutely, completely agree there. And you mentioned about the problem of credit penetration being low in India, right? So,
Right.
so when you dug into that issue, so did you find that okay, the real issue here is debt collection? That when the loans are being given out, it's hard to bring them back in. So, any data on that front? You shared data on how there's the penetration, credit penetration is low. Is there any data on the loans that are being given out? What percentage of those loans are actually coming back, and what percentage are not coming back?
So you're saying about the overall penetration of the credit, right? As to how much are getting entering the default cycle, etc. Right?
Right.
Uh, I think so. In general, so overall, if you see the population which has some exposure to loans, as in someone who has taken a loan in lifetime, is to the tune of maybe uh, uh, 25 crores, if I'm not wrong. I think out of that 22 crores are active loan accounts. So you can assume that maybe I think one fifth of the population, one sixth of the population has some sort of loan on them, which is still I think decent. But yeah, obviously there's a huge scope to grow, because these 20% is like the creamiest layer, right? Which actually has means to pay. They have taken loans for maybe I think obviously some a lot of people take it genuinely also, but a lot of people, like even including me, right? I have loans running, but I use that capital somewhere else to leverage that. I have never repaid my home loan. I have never repaid any of my loans which is running on me. Though I have the capability to repay it, but I have not done that. I think the reason is that a lot of people also, I think in that segment, uh, if you see even the split of the market, right, it was more bent towards secured loans. So at least the banks also had some comfort that they'll be able to have some assets against which they will be able to give loans. But now a lot of these evolution on the underwriting on alternate data has evolved. Now I think a lot of unsecured etc lending has started to happen, which is obviously at a higher risk segment, at a higher interest rate. But it also is like it's a risk reward, right? Like essentially you know that you're lending it out to higher riskier segment at a higher interest rate, but overall you'll be able to make money. I think तो उसके हिसाब से if you see, right, still the default rates in India at an average, though it will be different. Home loans is right 7%, 8% on an average. A personal loan would be much higher, 28, 30%. But on average, if you see across all the loan products, bounce rate is roughly 20% average. So if you say that 100 customers have taken a loan, 20 people will not repay it on time. So 80 people will still repay, 20 will not repay on time. And that enters the cycle of collections as to how you have to collect from them. I think in some business model like credit card for that matter, right? They want customers to default. So I think there's an intentional, I think pre-delinquency which is induced by the lender themselves. So I think there the bounce rates are a little higher. Yeah, but I think overall this is the fun. And in terms of how much gets collected, I think if you see the GNP ratios, etc., it is not more than 3%, 4%. So you can imagine 95 to 96% gets collected uh, in the first 90 days itself. So that is how the maths works here. Otherwise, because if that ratio crosses 3 4%, then I think all the lenders would be just in losses. I think so. That is the thought. That is the problem statement. But yes, I think now the question is that how you can either improve that number, even reduce that 3 4% to maybe 1 2%. You are stopping the funnel, or maybe you can just improve the funnel. As in that, suppose we are seeing 20%, right? Now we work with lenders. We say that 20 will go down to 17, uh, so that your overall flow in the bucket has reduced. Now your cost to collect has also reduced. So the cost you are bearing to collect that account automatically reduces, and it improves your ability to give out loans more faster. Now because you have a lot of I think access to capital which you can deploy faster. I think right now mostly the lenders face this problem that though we are sitting on a lot of balance to be dispersed, but we don't have like comfort that we'll be able to collect at that scale. I think so. How you can digitize the operations there? I think so that also becomes a, so digitization on the collection operations becomes a big key. So that how you can actually digitize there and reduce the overall flow. Yeah. So I think these are the basic numbers around the at least the lending industry and ecosystem. Yeah, which obviously are continuously evolving and changing. But yeah, that's the current number.
Right. Yeah. So we've got the insight here on which Credgenics was born, right? So now tell us, what is Credgenics? What is the solution that you built to solve this debt collection problem?
Hmm. I think so. As I was mentioning, right, in collection, so you can imagine, right, once you default, you receive a lot of calls, right, as a borrower, from different stakeholders, from different people, etc. Now imagine for a particular bank, let's say Bank A, their borrower base is roughly 1 crore, out of which you may assume 20% defaults. Just an example. Though the bank's default rate is lower, NBFCs is higher, maybe I think we can assume 20% default. So 20 lakh enter the collection cycle. Now, is it possible to call 20 lakh customers in a month and reach out to them via field and do that, right? You can imagine the type of call centers which they might be running. People, call centers with 50,000 people, 1 lakh people, I think so, which is a huge intensive, and there is so much risk of escalations, right? Because like someone can speak in whatever tone, right, you want. So I think that activity is very, very, I would say, concerning as to how you can, I think, speak and how you can control that. Like a lot of analytics etc. is happening even on type of calls are happening, but still it is very difficult to assess as to what all things someone is doing, right? So the best way to do it is like let go of these calls and move a lot to the digital channels of reach out. Now you see a lot of loan sourcing is happening through digital modes. Loan on WhatsApp, right? You can on a call you can take a loan in 2 minutes. Now, if you're sourcing the customers digitally, why cannot you do? I think push them or nudge them or at least remind them versus following up on calls every time. I think so. There we saw that what is the borrower behavior on a lot of these digital communication channels and platforms, and how you can enhance. I think bots on WhatsApp on voice, a lot of innovation is happening on bots on voice where it is exactly mimicking the human telecaller, but it takes some time for the even the borrower to identify that it's actually a robot speaking and not a caller. I think so that technology is evolving, and now with the evolution of these Gen AI use cases, I think a lot of these things are becoming very real time in vernacular in Indian languages, so that at least you can remove a caller and you can put in a robot who has very human like voice modulation, and they can exactly mimic the way how a human talks, so that you can reduce the flow to the call center. Now I think these 20 lakh calls, if you're able to, let's say, a lot of banks have posted that 50 to 60% is resolution is pure digital, which essentially means that now 60% 10 to 12 lakh accounts gets resolved through a lot of these digital reach outs, then only 7 to 8 lakhs will flow to the call center. So automatically the funnel reduces, and I think our company genesis also happened during COVID. I think though we started 1 year before that, 2019, but in COVID, because of lockdown, I think everyone had no option but to sit out of their homes and right, run the collections. So there we saw a big opportunity where a lot of reach outs happened to us from the different stakeholders, banks, etc., that how we can help them in digitalization of these processes. So I think our company provides platform which essentially allows the banks to run a lot of these show digitally, and also then bring on their stakeholders uh, who are from their calling team, from their legal team, from their field team, to come on our software solution, integrate with each other, and also create a very strong feedback loop between different teams. So now the same borrower is not being repeatedly pursued by their legal team parallelly, by their field team, by their calling team. Everyone knows what's happening there, and they can optimize their efforts. And also the overall collection rates improves, their cost reduces, because now repeated efforts are not happening on same accounts, and it improves borrower behavior also because you are not like harassing the same borrowers by multiple reach outs. So I think like it serves the purpose both ways. So we're working with now more than 100 plus banks, NBFCs, lenders in India, Indonesia, in Vietnam, starting in Middle East now, getting a couple of clients in Dubai and like UAE. Yeah, so I think, but still 80-90% of the market is in India. And I think like figuring out the similar type of use cases in other industries as well outside the lending ecosystem, wherever the digitization problem requires some innovative solution.
Absolutely. That's a very respectable solution you have found there, and also scaled that to a sizable number. 100 banking clients is a very big number, right? So, tell us about the initial GTM strategy when you started out the company. How did you think about go to market? Because selling to banks is not an easy business.
No, which is a very good question. I think, Prashant, I think any for that matter, any person who's starting a company which is selling to the banks or lenders in India, it's not a very easy job. Uh, I think because it's a chicken and egg problem, I would say that. Till the time you have not developed the product, you will not be able to test it out, and I think you require some customers to test it out. So banks will not be ready to test your product till the time you have developed it. So right, so it is both, like both the ends. I think are creating the tussle right now. How to go about it? I think so. The best approach here is to figure out small fishes in the pond. So we went for fintechs. We went for small fintech lenders who can help us also innovate and who are more open to figuring out newer things, and also who don't have very set processes internally, whether it's collections or any other pieces, so that we become a small R&D unit for them, where we are also, I think, brainstorming, doing some things, and they are also doing it. So I think we started with fintechs. We built a product with them, deployed it with them, got money from them. Like from their perspective, I think they didn't need to hire a collections team because we were the brainstorming unit for them. So how to set that entire process, etc., etc. I think they felt that at least they have got some bright minds who are focusing on that particular problem statement. Though I think we were building for the industry, but at that point in time, it felt to them that it is being built for their use case. Though I think we obviously have clearly mentioned that we are building it out and we want to understand the domain, etc. Hence, we are working on it. But it became a win-win situation at that, in the time frame when both of them are very early to understand the processes. I think so. Our initial customer segment was fintechs. We have taken that fintechs along in the growth journey. I think someone who was paying us, maybe I think I remember 10,000 rupees monthly in 2020, 2021, is paying us roughly 1.5 crores monthly now. Reason being, they have grown, we have grown. I think the comfort is there, and almost 100% collections, you including platform, including the people, everything. They said that you manage our piece with like end to end. We don't want to build any collections team in house because we never got into that zone and we never felt the need of it. Since I think we have been working with you since like you started, since we started, I think so that type of partnerships have grown, and then I think once we had a stable playbook, then we went to the banks to offer the same thing, and it was a tried and tested playbook. So I think then if there is some data points, obviously the banks are also open to look at it and do some POCs to figure out what synergies are. So I think first 1-2 years don't sell to the banks, go with the fintechs and NBFCs who are ready to experiment, and then go to the banks.
Absolutely. Yeah, that's a very practical approach there. and will be helpful for other fintech founders trying to build in that area. And if selling to the banks is the goal in the medium to long term, right? And talking about product market fit, right? So of course that's not something you think about initially. Your goal is to just get some few customers, refine your product, right? But at what stage did you start thinking about product market fit, and what did it feel like for you? So now you're at series B, right? So have you already achieved product market fit? If yes, then what was the key indicator for you that made you say, okay, yes, this is product market fit for us?
I think that's also a good question, which almost all the founders struggle with. As to when you say this idea is working, or when you can say that like it's a tick mark, right? Against that. Uh, I think so. Product market fit. There's a lot of misconception also in the market. Uh, People generally aim for perfection in the product before going out and sell. We have seen so many great product leaders who will just keep on refining their product, figuring out a lot of these things, and they have not even tested whether that sells or not. Right? I think so. That is a very big problem. I think how one should approach obviously is to firstly sell that product and then build it out. Like not at least in the early stage. I'm not talking about now. I think though the sales guys have that habit of doing it now also, they will sell something and then the product team has to build it. But yeah, I think initial days, generally I think everyone has to sell some vision that this is what we are trying to do, or maybe some prototyping, something which showcases what the problem is, what the problem statement is, what you're trying to solve, how will that impact their lives. And if you receive a wow type of reaction from the customer, or at least sign-ins and sign-ups that we are happy to experiment, you do it, and we are ready to pay also. Like some, you will meet a lot of people who will just say that yeah, we are open to explore, right? But when it comes to giving money, they'll not give money for that piece. So it's very important to figure out customers. You can try doing some signups, some customers who are ready to pay for that, and who you like. Obviously that trust building activity has to happen, so you have to build enough trust that they also feel that if they pay you, you are not going to run away anywhere. You are there to build, right? So that trust has to be created. But if you are able to build that trust, and then if you're able to get some initial customers on some concept idea stage, or maybe some prototyping, some wireframing, and tell them what the problem statement is, and get sign-ins and buy-ins from them, then automatically there's some product market fit. And then obviously if you start working with some customers, and then you figure out the problem statement, etc., I think automatically you will be able to understand what is working, what is not working. But yeah, there has to be some genuine interest. I think you have to also filter out genuine interest versus people who have just don't want to maybe a spoiler mode, right? They will not say no. And I think it's in India, I think that is a very common mentality. The sales people will not get a very clear answer as to whether it's a yes or no. So it's important that you are able to figure out some candid responses, and maybe speak to some of the people who have sold to that same segment, who have built companies in that segment. They will also be able to at least gauge whether that problem statement excites them, or they excite the bankers enough or not. I think so. Those things you have to figure out. Yeah, you have to at any cost get some initial customers without launching the product.
Absolutely. Great. And so you're now working with like 100 plus banks or NBFCs, right? So tell us about how did you get your first banking or NBFC client?
I think the first ones were fintechs, which I told. I think it
Okay.
was through that common interaction, and we were able to figure out some R&D for them. I think where there were a lot of early stage fintechs were working with us. I think so. Earlier, mostly it was fintechs. Then the first bank we onboarded with us, I think, is HDFC and ICICI at the same time. I think so. Their conversations also happened for some initial small scope on pilots as to how they can see some process improvement, etc. I think so. Like they will obviously try to validate what they are trying to do is works or not, or what we are selling works or not. So I think that happens via proof of concept, which is a low scale, low volume POC. But if the results are good, then the scaling happens. So I think yeah, those were the initial two customers. On the NBFC side, I think we have been able to score big customers after showcasing some of these case studies of the existing customers. And I think if you have actually built a good product, and if the customer feedback is good, I don't think you will face any challenge in sales, because there's a lot of rotation around the industry. Also, someone who's working for X bank will join Y bank and will take you along. Someone who's working for fintech will join an NBFC and take you along. And it's a word of mouth also. I think it's a very close knitted community in the banking ecosystem. Everyone knows who is doing some good work, and Everyone wants to leverage and cross leverage that intelligence, and hence I think we have seen that a lot of word of mouth spreads and helps you in marketing. So for example, in our case also, I think it's hardly any outbound which we do. A lot of inbound flow from referrals, from client referrals, from here and there, from consultants, from folks like McKinsey, BCG, a lot of these guys who have heard about us from the market. Wherever there's a problem statement, at least they will reach out. So try to create that word, and also try to solve for actually the customer problem. Automatically all the money will line, I think. So I believe that, like, the customer, happy customer paying you money versus an investor paying you money, I think everyone wants the customer paying money versus investor.
Absolutely, totally agree on that. And that is also a very good indicator of PMF or early PMF, that you're getting a lot of inbound with your customers referring you new customers because they're so happy with your product, they're talking about it. So that's a good sign for you there, right? Awesome. And talking about the recent fundraise, it was a $50 million fundraise. Many congrats on that, which you announced in August of last year. So, and that was with a 3.4x growth in valuation and a 7x growth in revenue since your previous round. And you've also turned profitable, which is something very respectable given a lot of startups with sizable rounds haven't turned profitable yet, right? So, give us a look into how the company has built momentum over the past 3 to 4 years that has resulted in these numbers.
Sure. I think, yeah. So I think, as in, I also keep on saying this. I think funding is a outcome of your efforts. I think so. Investors, etc., etc. I think to never chase investors. I think if the product is good, problem statement is good, they will chase you. I think that's a full time job to figure out good companies, and also in India, at least at this point in time, there's no dearth of investors. Everyone has become an investor who is sitting on any amount of capital, and they know that the upside is huge. At least in the early stage private companies, there's a huge upside. So a lot of these investors have become active. So if you're doing some good work, if they keep, because these guys are already connected in the market. So I think obviously you have to also reach out, and you have to, I think, sensitize them about what exactly you are doing. But at least I think they also are aware. Like, when you reach out to them, it's not that they're talking to you for the first time. They might have heard about you from some other customers. They might at least be tracking you on LinkedIn to figure out what you are doing, what is the progress, etc. I think a lot of these things happen. uh, uh, I think as far as we are concerned, I think so. Our round was led by our existing investor only. I think since we saw that, like existing investors putting in more money essentially showcases that the company is doing good. Otherwise, no one will want to just put in more money at a decently higher valuation, right? I think so. For us, I think the growth levers are very straight. In India, we are expanding in the lending ecosystem. We are also exploring some use cases around other industries in the BFSI space, in insurance, in others, where the use case remains the same around premium collections, around a lot of these things, and also expanding in Southeast Asia. How we can cut copy paste and go to Indonesia, Vietnam, a lot of these potentials exist. Now, this can happen through both the routes, organic and organic. I think so. We are also exploring and in talks with some of the companies for an M&A. So how we can deploy the capital meaningfully. I think so. Like, it depends upon the growth stage of the company you are looking into. I think our focus was always on increasing our top line and bottom line both, and we were never dependent on investor cash. So I think the best part about I think investors reaching out is that when they see that you don't require money. Uh, so when they know that you don't require funds, then is the best time they would want to put in more money, because at least they know that their money is safe. I think so. We were break even. We got break even, I think, last year, financially at a monthly level, we broke even. Last year, we have reported a profit, and this year also, I think we are focused on the bottom line. So we know that the revenue at any cost and growth at any cost. I think the philosophy has also gone from the ecosystem. And at this point in time, also, I think we believe that this philosophy is not here to stay for longer, because ultimately, if you have to, I think, go for a public listing, etc., etc., everything boils down to the bottom line. So better be prepared in advance versus growth at any cost, I think. So we have been following that philosophy. I think hence we have been growing stably and organically, and but not exponentially. I would not say our growth is exponential. Our growth is a fairly, I think, a decent growth rate, but maintaining the bottom line. So I think we are not that we'll pump in money just for the growth.
Absolutely. And I think that's the ideal mindset, especially in the current fundraising environment when the dollars are not flowing as they used to. So you have to show that you've built a solid business that is also in itself sustaining, is generating cash on itself. And then you can ask investors for money, because now at this point of time, investors are no longer interested in giving you money to burn, right? They
Yeah,
want to
exactly.
give you money, but they want to give you money to scale and scale a solution that you've tried and tested, right?
Exactly.
So that's great approach, that's very valid today. So how do you think your strategy or your approach has changed from the early days of Credgenics to now when you're looking for scale?
It's very different. I would say it's very, very different. I think I am altogether a changed personality, how we started versus how we are now. I think how we started, it is a lot of hustle, right? You have to wear many multiple hats. You have to do a lot of things on your own. A lot of teams are not organized. So it is a lot of chaos, no structure in the early stage, but it is fun because that is how any business can grow. Like if you put in processes and a lot of these things very early on, I think that kills innovation. That is not the I think that is also one reason, right, where a lot of big companies are not able to innovate because they don't cannot change the processes. uh, they will not be able to do that. I think hence there's a lot of scope if you are like hustling and if you're innovating again and again, changing your approach. And I think the teams are not very structured and are unorganized. Their teams are unorganized, but they are very actively working with a common goal. But at least put they're not put things in processes, etc. So you have freedom. You have a lot of freedom. I think the one continuous feedback I keep on hearing. So a lot of people, I think almost 80 to 90% of them who were there with us when we started are still with us. I think, but now I keep on getting complaints from them that a lot of structure has come in, right? A lot of processes, HR policies, this and that, etc., etc. I think have come in, which is ideally not an ideal thing for them. Hierarchies have come in, approval processes have come in. It has become like a traditional corporate now, right, with scale. So a lot of these things I keep on hearing. Though I think our thesis is obviously not to make it a traditional corporate. I think so. We keep on professing that it is still a startup environment where all these things, there should be flexibility in terms of how you have to approach and do things. But still, I think the processes are important to scale, because the reason is that otherwise it is impossible to scale. If there is no playbook defined as to what should happen, if these things are not in place, then that company will never be able to scale. I think you can innovate, you can run, but if you have to scale that solution, you have to bring in processes, you have to bring in checklist, you have to bring in a lot of these pieces where you can confidently say that these are the things you have to do, and then you can be rest assured, and you also don't need to bother, and you can I think at least we should rest assured that the things will happen with some protocol, and hence the chances of leakage or gaps are minimal, right? Because otherwise at scale it is not possible for a single person to monitor everything, right? At this stage, right, I cannot go into and deep dive in finance or sales or customer success or so many teams. Now I cannot go individually and check what's happening. Hence it is important that we keep policies in place so that at least we know that whatever is happening in those teams is also happening as per the protocol, and there is no leakages in the system, and there is things happen are happening as should happen in a smaller setup where I am monitoring things. But still, since I cannot monitor everything, my teams have to function like they are at least accountable and responsible for those things. And how you can put in like Salesforce monitoring the sales movement in the pipeline. If there is any flag, it gets flagged, right? Otherwise what used to happen, I used to review the sales pipeline every other day and see कि कहाँ पर होना था, closure नहीं हुआ, and it flowed to the other pipeline. Now I cannot look at 200 customers list assigned to so many reps that these customers have not converted, right? So since the scale has become, it is very difficult for any particular individual to work in the same fashion as they used to in the early days. Hence it's important that processes have to be brought in if any company has to scale. And I think that's a best example is obviously airlines. I think like with all the processes, etc. Like anyone can run a bus service, right? They can run in a very seamless manner, hassle free, etc. But the chances of a road accident is much higher than a accident in an aeroplane, right? Because it's aeroplane, that industry is more organized, processed. Everything happens by protocol, right? So automatically the accidents, the failure rates are much minimalistic versus someone who is driving a bus on a road, right? So like, but you cannot directly fly an aeroplane, right? So you have to start from a road bus. So that is the nearest analogy I can give. But yeah, I think it's important. But at the same time, you should ensure that you are not killing the innovation. So I think once I started feeling that we as a company are just fixed on our offerings and we are not innovating enough, we carved out a separate innovation R&D and a founders office team who's just keeping a check on the market to figure out what's happening, talking to customers, what's new, etc., so that we keep on evolving and at least our pace of innovation is not stopped.
Absolutely, completely agree on the standpoint of processes and the need for hierarchy as the company grows. But the other aspect of this is culture, right? And it's incredibly hard to scale the culture of an organization, right?
Right.
So, how do you ensure that as the company has grown in terms of headcount uh, and the number of leads and the heads there in the company, right? How do you ensure that the culture remains intact as much as possible? Because initially you're the founder and everyone has an in-person contact with you. They can just approach you and
Right.
say, okay, this is my concern, get it resolved and go away. But now
Right.
with a lot of hierarchy coming in, how do you maintain that similar culture with so many more people and processes?
Yeah, I think it's also very, very important part where I think a lot of people and founders especially don't focus much. I think a lot of focus is on the overall business, but I think it's very, very important that how we are able to percolate down the culture. I think it starts from you. I think it's everything percolates from the top. I think, but like you have to ensure that at least so the respective heads of the different verticals are aligned with you, so that the way how you were monitoring things when the company was small, they are also doing it in the same fashion. I think so that importance should be there as to how we can percolate our values, our culture system to them, so that the same can be replicated by them on the entire organization. Because obviously the different teams would require the leaders to have that same culture, and that is how they penetrate. Right, any culture would come from the top. And parallelly, I think you have to also be in touch with the ground reality. At least at our end, I think we keep on I too particularly I think keep on like talking to so many people, right? I just keep on roaming around the floor, sit with anyone outside to figure out what's happening. I give my number to everyone that please reach out to me if you feel that no, it's this is not getting heard, etc. Some people I think have come and said and complained that we feel it's a breach of hierarchy. They directly reach out to you, etc., etc. But I don't feel the same way. Obviously, if someone is bothering me for like very very trivial things, then obviously it will not be right to waste time in that fashion. But at least I should be accessible and should be in touch with what's happening on ground. Hence I think that at least from a culture standpoint, at least I've maintained that. And obviously I think in like wherever there are humans, there is going to be cultural issues, there are going to be internal politics. And I keep on reading my Glassdoor, I think our Glassdoor reviews as to what all are the people feeling, because that gives you a real picture now. So I think I read a lot of these Glassdoor reviews, and immediately the next day I called a meeting of HR as to how are we controlling these things and what is the next thing which we have to do. How you have to like promote the culture of rewards and recognition, at least appreciating people wherever that's necessary versus just I would say imparting them and also snubbing them whenever they have done wrong, right? Which is a general human tendency. Internal politics, how you can remove it. See, politics is a part of every organization. Like as anyone will scale, it will become a part of it. And in personal life, in corporate life, everywhere it's there. Wherever there are humans, there is going to be politics. So I think that is something which is very very natural. Now, how you can minimalize, how you can ensure that the processes don't endorse it, the recognition don't endorse it, the management doesn't endorse it. I think that is the only way you can profess and try to reduce it, but it will go away. That is not possible. I think so. We have to be realistic and practical in that approach. I think, which I also keep on saying, that just no one should play a victim card that a lot of politics is happening, etc., etc. Either you bring that matter up or you learn yourself. Don't play this card. I think like we are there to help you out. We are there to minimize all these things and ensure that it's a very healthy work environment where every work is getting recognized if it is done in a proper shape, versus any other shape and form. I think so. I think obviously that message has to come from the top again and again, so the everyone is comfortable that at least the top management is aligned with what we think, right? So and you keep on reviewing the processes, etc., and be in touch with the ground reality, so that at least you are aware what's happening in your company. Otherwise, it's very difficult now to talk to 550 people, right, individually, to figure out what's happening. So as you rightly said, in smaller companies, since you are talking to everyone, it's very easy to maintain that culture, but it's difficult to maintain it in 550. But if you follow these things, at least it will be maintained.
Right. Uh, Great points there. And moving to the last main question before we go for the close. So now you've raised your Series B. Are your eyes set on the IPO? Do you think is there a timeline on which you're trying to achieve that? Uh, can you give us a view into that?
I think so. In general, there's no timeline defined by any investors or anything. In general, I think we feel that, like from our last fundraise, like we took a time of 5 years for that matter. Like let's scale this to maybe a 800 to 1,000 crore business, and then to go for an IPO. That is an internal timeline which we have set for us ourselves. But it's important to keep a milestone for yourself. I think otherwise everyone will lose the vision and also lose their way as to what they plan to do. I think so, hence we have kept those targets internally, I think, but there is nothing from investors or any formal communication which is out there in the I think media. But yeah, internally I think we plan like at least we should um, be ready for an IPO by 2028 or 2029, so that the company numbers have scaled and we have like done enough, because we don't require funds at this point in time. I think the one big best part about our business is I think we are sitting on more funds than we have raised in our high lifetime. Uh, so I think the capital in bank is more than the quantum which we have raised, which essentially means that uh, at an overall cumulative level we are profitable. So we don't require
Absolutely.
funds. I think now the primary our job, obviously, that is our responsibility to give some exit to our existing investors and also plan for some public listing. I think so that is what we are doing. But yeah, that is more of a internal target versus an external.
Right, absolutely. Amazing numbers there, amazing growth, amazing trajectory. I wish you all the best on the journey ahead. And to close this out, can you tell us where can our listeners learn more about Credgenics and also about yourself to follow your journey ahead?
Yeah, I think so. Like we are there on www.credgenics.com, and you can read about a lot of the articles which are published on Economic Times, BFSI. You can just Google Credgenics and you'll find out a lot of media articles about us. And a lot of research papers I think are there on our blogs, and research papers are there on our website also. So if there is anything which you have to specifically learn about the financial services market, you can reach out.
Awesome. I'll make sure to put all those links in the show notes below so that our listeners can get there easily. Thanks so much, Rishabh, for doing this with us. It's been a pleasure talking to you and great insight shared. Thank you.
Thank you. Thanks a lot, Prashant. Thank you.